Good evening, everyone. So, we left off with part one of the strategy review. Talked about my keywords, what are my keywords, why I built the strategy, the entire context behind the strategy, what I have, and what I pretty much have now. A little introduction to the strategy builder as well. So, some things have changed since we last met. What I've done is I have gone through every single one of the 317 trades and edited them to update them with my newest standards of the keywords. Because when you start a strategy, you're starting blind, right? You have a rough idea of what you want to test, and then you just go for it. And you subconsciously pick up on patterns and things that start working out more times than they don't work out. And for example, I stopped stacking keywords like trend plus liquidity momentum. They're both pretty similar, so I don't stack them, right? So I don't stack keywords, just some keywords that are incompatible, so on and so forth. Started getting more picky with some of my keywords, and by over the last 3-4 months, the way I use my keywords has changed a decent amount. So I want to show you guys something. 317 trades is what I have right now. Soon it'll be close to 400 because I will do October. If I go to notes, every single trade that I edited, I typed edited in all caps. And yeah, let me turn on my screen share. So 317 trades, 236 with notes. However, for every single trade that I edited, which means I changed the keywords up a little bit, I typed edited in the notes. And you can see here, out of my 317 trades, I edited roughly half of them. And I believe that's not quite all of them. But regardless, I made 138 edits to these trades. That's a lot. Okay. Look at September. Who cares about the P&L? Disregard that. 10 trades I edited out of 68. August, 13 trades I changed. July, 20 trades. And most of these changes are minor, okay? Out of the 10 trades I changed in September, maybe 2 of them changed the actual outcome of the trade as far as whether or not I'd be able to trigger in. Because as you guys know, I get into every trade with 2 more good keywords than bad keywords. But September changed 10 trades, August 13, July 20 trades, June 39 trades I changed, in May 56 trades that I changed. So this just goes to show that as you develop your strategy, a couple months in, after a few months of backtesting, it's going to be very different. And a lot of people skip this step. They don't go back and audit their backtesting. It's really hard to backtest without at least having a little bit of bias. Because after about 2-3 months of backtesting, that's a lot of hours you've put into your trading system. Stream failed to start for me. I'm not sure why that you guys are having that issue. Try leaving and rejoining. But type in chat. You guys are able to see the stream. Type in chat if you're able to see the stream. Because some of you are, some can't, I guess. Works for me. All right. If you're having issues, leave and rejoin. But anyways, after you get about 2 months of back testing, that's a lot of hours you've put into your strategy, a lot. And you start becoming attached to your strategy. Like these first 2 months, man, 2 keywords is a lot better than only entering trades with 2 more good keywords than bad keywords. I think I have something here. This is great, right? I mean, my May was plus 16,000. Now, after it's edited, it's plus 12,000 after the keywords. Big difference, right? But still very good. After about 2-3 months, you start getting attached to your strategy because you put so much time in. And if month 3 and month 4 start going bad, if a trade barely sweeps your stop loss by a tick, you're going to go back in time, bump out your little stop loss a little bit, and then move on, right? Or I'm purposely not going to include one of the bad keywords that's kind of debatable, but probably should be in there because I don't want to miss out on this green trade. So some of that hindsight bias starts coming into play, and before you know it, you have 4 or 5 months of good back testing. Data looks good. And at this point, by the end of your, it's not like it's not like you're purposely trying to falsify your data, but it's subconsciously getting skewed by your hindsight bias. And when you start forward trading your strategy, which should be fantastic, all of a sudden your forward testing, which is your real trading, doesn't match your back testing at all. In fact, you're not even having green weeks. You're having red weeks. You're having far more red days than green days, and you wonder why the gap is so big between your back testing and your forward testing. Type in chat if you guys have ever experienced that after being confident in a strategy and taking it to forward testing. If you experience a very, very big gap between your live performance and your back tested performance. I can see who's in chat. I know at least 5 of you have, but most of you guys are shy. That's okay. Yeah, it's common, right? It's common. I've experienced it as well. And it's because of subconscious hindsight bias. So what I've done is I have created a blind audit mode. Now, oh, I need to refresh my screen. Hang on. Give me a moment. There we go. Now it's here. I've created a blind audit mode because for me, I got to go back through every single one of my trades and review, okay, are these really the keywords? Well, I'm personally a little biased. It helps me if a green trade has 2 more good keywords than bad keywords. And it hurts me if that's not the case. If it does have 2 more good keywords than bad keywords, whether it's 3-1, 2-0, 4-2, whatever it is, and it's a red trade, that hurts me. But with this mode, and I created this just for this, blind audit mode. Now I have no way of knowing if a trade is green or red. I don't see the P&L. These green and red arrows just mean long or short. And I can't see the second screenshot. How you guys are supposed to use these screenshots is the first screenshot is your entry. Here it is. And your second screenshot's the result. That's what you're supposed to do. And when you backtest, I've talked about it in the last part, as you're backtesting, you're in replay mode in TradingView, you come to a point at which you think you could enter a trade here, then you do your keywords, then you log the trade, and then you find out what happens to the trade, and you log the last half. So it's blind. It's a little more authentic. But when I'm going back through keywords, it's hard for me to not see the P&L and stuff. So I created this mode to where I can authentically go back and see, do I agree with these 3 strong words? Should this be a 3-to-1 trade? Trend, strong, other, liquidity, momentum. Now, for trades I'm not too sure about, that's kind of debatable. There's 2 more gray areas in my strategy that I need to work out that I haven't worked out yet. Trend plus other, liquidity, momentum is 1. Then I type review in the notes, and now I can just use this filter and pull up all the trades with notes that include the word review. 24 out of my 68 trades have the word review. Then I'll go in and review them. And after I review them, I add a new word in the note so I know. So this is what I did. This is how I audited my trades. And I still have a decent amount to review as far as double review, right? When I audited them, some of them were a little bit debatable. So I'm going to go back through one last time in the blind audit mode and really just finalize. There's no more debatable keywords. It's done, right? You're always going to have trades that are kind of on the edge, right? Especially with a strategy as subjective as this. Not really, it's pretty mechanical, but as complex as this. But you're at least going to be very, very informed and understanding your keywords. And all your keywords, every time you look at a setup and you log a trade, your keywords are a complete accurate representation of your bias. So anyways, that's the blind audit mode. That's what I did. I have reviewed every single one of my trades. Why do I need to review every single one of my trades? Now, we already talked about it, right? I need authentic data. And while you're backtesting live, it's easy to have hindsight bias because you're in the middle of grinding. You're in the middle of spending hours on the strategy, right? And when you're in the middle of spending time on the strategy, you don't want it to be a waste of time, right? This Maybach testing right here, I did that months ago. I did that at the end of July going into August. It's currently November, the beginning of November. So I'm completely detached from the amount of time I spent months ago on this month of backtesting. And not only that, I forgot what had happened. So when I go back through in the blind audit mode, I'm not as attached. I already know that this strategy is good enough. I already know that, right? With my scenario filters, we'll just slap on the scenario filters real quick. There we go. That's damn good. 62% win rate. That's good. Look at the months. Now I trade at half of this size. That's plenty for me. That's plenty. So I don't care if I go back through an audit May and this 12,200 drops to 10,000. I don't care. I need the results to be authentic because I need to know what to expect. And we're going to get into that in a minute. How can you know what to expect? Well, that's part of the strategy builder, right? Authentic data is crucial because when do we enter mind freeze when we're trading? Mark Douglas talks about this. You enter mind freeze during trading when your expectations are so far outside of the reality of the environment that you're operating in, your brain simply cannot process it and it shuts down. When you enter a trade that you're so confident in and it goes against you so sharply before you even place a stop loss, or you're so confident that you don't place a stop loss, you plan on averaging down if it pulls back. Well, if it keeps dropping, your brain shuts down, you stop processing it, you freeze, and you just sit there and watch the market take all your money away until or unless an innate sense of self-preservation kicks in and you sell that trade, you exit that trade only at the point which the pain of losing one more dollar exceeds the pain of being wrong, right? You don't get out of a trade. Most retail traders don't exit a trade that they're confident in until the pain of losing one more dollar exceeds the pain of being wrong. And that's a really big loss, right? You can't trade that way. And mind freeze is created by false expectations. Now, 99% of traders have false expectations. They don't understand the probabilistic environment that we're operating in, not like you guys do, right? You guys have been doing this for a while. As far as the trading psych stuff goes, most of you guys. So you guys understand, most traders don't. So expectations are a big, big thing. You can never expect an outcome to work in your favor or not work in your favor, right? It's okay to hypothesize that, yeah, this trade's probably going to work out, but never truly expect it, right? Because if you start expecting things, especially with confidence added, and you're wrong, your mind's going to freeze up, your psyche's going to deteriorate. So what am I getting at here? Well, your data isn't just supposed to show if a strategy is going to work or not, right? I can pull 10 strategies out of my rear that I know are profitable. Maybe not with the greatest win rates, but it's not hard to figure out a strategy where over 100 trades you've made more than you've lost. That's not hard at all. But most of you guys trade funded futures, and the reason I made this strategy, which I talked about in part 1, is for funded futures trading strategy during the second and third hour specifically for me, because I can't trade during the first hour. And these funded futures accounts, they have drawdowns, they have rules. Just being profitable doesn't cut it. You need to be a lot more profitable than unprofitable. You need to be extremely consistent and avoid, for Apex at least, which has the hardest drawdown, an unrealized trailing drawdown. Other brokers have an end of day drawdown. Some brokers have a realized drawdown. Whatever it is, right? And that reminds me, let me write a sticky note. On the scalability analysis, I don't have an end of day drawdown. Because remember, I made the scalability analysis for me personally. So, and I don't use end of day, but EOD. Yeah, I'll remember that. There you go. So, unfortunately, some of you guys, and I've done this as well, Truly build a strategy with no bias. You go back through. It's so mechanical, it's hard to have hindsight bias because it is mechanical. You're confident in the stats. The stats are green. There's no hindsight bias. The strategy's authentic, but still, when you go to trade futures with it and trade on your PA blows up or doesn't go anywhere, or you still experience accounts blowing up. Well, unfortunately, there's no way to know how a strategy is going to perform unless you forward test it. That is until I did scalability analysis for the first time. Now, I'm not going to dive into scalability analysis like I did during the scalability analysis lesson, but what I did by hand with my afternoon strategy at the beginning of the year is every single trade I took for the 4 months of data that I had, I wrote down. Pen and paper wasn't very efficient. Should have used an Excel sheet, but I was having a good time at like 1 in the morning. All right. Pen and paper, wrote down every single trade that I took with the dates and the P&L of those trades. So I had the trade data, and then I simulated what would happen if I added a PA, a funded account at any given point. Now I trade the standard $50,000 accounts with a $2,500 drawdown. Top step is a $2,000 drawdown. Most people here trade a $50,000 account. It's just the best middle ground, best value, easiest to pass as far as drawdown to profit target. So most people trade. And I simulated trading, starting a PA at any given point in time. And I realized, wow, even though this strategy is so profitable, if I start a performance account at the wrong time, it's going to blow up. A lot of them do. So how the heck... I realized that like 40% of every single PA account I start, which is a performance account with Apex, 40% of the accounts would blow up. They'd reach the $2,500 unrealized drawdown. 40% of them. I'm like, oh my gosh, so how am I going to scale? Soon I realized, okay, yeah, we're done starting PA runs with, boom, let's just start trading 10 PA accounts tomorrow. The odds, would I ever bet 20 accounts on only a 60% chance of even making it out of drawdown? Hell no, that's terrible odds. It's a huge financial risk, right? You spend thousands of dollars on those accounts. So I quickly realized, okay, never again will I start with a bunch of PAs at once. It's just a straight up gamble. For me, what I noticed is once in between $0 and $4,800, no, exactly $4,700, because I remember it, that's a danger zone. $50,000 fresh account, $2,500 drawdown to $4,700, that's a danger zone. That's a roll of the dice if my account's going to make it out of that. Because with the drawdown, if my account comes up to 52,000 and then pulls back 2,500, it blows up. Even though it ended up going up in the end, it blows up. So I had to look at what's the maximum pullback that my strategy's ever had. And for me, that's like 4,500 for the afternoon strategy from the early. So I realized, okay, my biggest pullback I've had is 4,500, and my average pullback is roughly 2,800 to 3,000. So really quickly you learn, and this was, I believe it was a little bit before Apex introduced the buffer rule. So really quickly I learned that, wow, because I had a huge issue, I can be a profitable trader with futures. I can just trade subjectively and get it. But here's my problem with futures trading. I can't get my accounts to last for more than 2 months. I can't get my accounts to last more than 2 months, right? My best one was maybe 2.5 months. I just couldn't do it, right? Between having bad psychology towards the end or starting the account with bad psychology or just blowing up naturally, I could not get it to last. And I realized that if it's within $4,500 of drawdown, it's dangerous because any given pullback could ruin it. But once it's over 4,700, never has there once been in 4 or 5 months of back testing has there been a pullback greater than like 4,600, 4,500. And I was always taking my payouts at roughly 54,000, maybe to 55,000, which will bring my balance back down to 52.5 to 53 because I'm like, I still got the full drawdown, right? 2,500. No, because I just dropped my accounts back into the danger zone. That's an issue, right? Because if I don't pay out and I never revisit the danger zone, I have a 40% chance of blowing my accounts before they get to 40 plus $4,700. And then after 4,700, no accounts blow up ever. So why would I ever want to put my accounts in that situation? So I quickly learned that I'm not going to pay out any of my accounts, which on Apex the payouts are $2,000. I'm not going to pay out any of my accounts until they get above 57,000. And that strategy was heavier size, bigger trading, so on and so forth, right? That's a big change that I made, and my account lasted for 40 days, one of them. The other one's 20 days. Got a decent amount of payouts, but finally the strategy stopped working, as I talked about in the last part, and there it went. But I learned a lot. And that's when I kind of invented the concept. I don't know if anyone's done it, but I called doing this analysis scalability analysis. Right? You're analyzing the scalability of your strategy in the context of funded futures trading. How well can I scale my strategy as far as adding more accounts to it, receiving payouts, so scaling income from it, or scaling trade size? I've never done that before. And when the first time I did it, it was so eye-opening because I realized that I was always, if my accounts ever got above 5,000, 6,000, whatever, even 3,000 sometimes, I would always pay them out right back in the danger zone. If I have a 40% chance of blowing up my account if it's under 4,500, and I take, how many times is it going to take to visit 40% chance before the 40% chance sticks? Probably not more than 3 to 4, right? That's exactly what I was experiencing. So I figured out the solution to my problem and I started executing it, and then the strategy stopped working, so here I am again, right? And unfortunately, with this strategy, even with the scenario filters applied and trades that I can actually get into, I can get into 167 trades. There's a hell of a lot more trades in this strategy than there was in my afternoon strategy. I am not making an Excel sheet of every single trade with the date and time with the P&L. Way too hard. So I built this fancy tool. This is a P&L performance tracker. You can see it's a line of every single trade and every single day. Oh, this is just every single day of your cumulative P&L. That's a pretty stable line, right? Let's turn off my scenario filters. This would appear to be, if you just even without the scenario filters, this looks profitable, right? Now I trade half of this size. This is 2 ES, 1 NQ. I trade 1 ES, 5 MNQ on my funded accounts, my performance accounts. 49% win percentage, but look at the risk to reward. Right? Average trade P&L $100. That's not bad. This is profitable. September, $10,000 month, 50% win rate. September was just great for probability analysis in general. Just one more keyword, you know. I don't even think my scenario filters helped September. It just boosted the win rate a lot because it shortened the trades, which matters. Well, what we're going to do in this session is go over the scalability analysis. But before I do that, is there any questions about anything I've talked about so far? Are you guys clear with what I did between part 1 and part 2? How I audited my trades, why I invented or created the blind audit mode and how I use that? Do you guys understand the entire process behind how I've kind of built the strategy up to this point and audited it and did all that stuff? Okay. And type in chat, how many of you guys are having issues with it? Most of you guys can see my screen, right? I know some of you guys can't. I don't. There's nothing I can do to fix it. It's just a Discord thing. I can leave the stage and rejoin if it's a lot of people, but if it's only a few people, I'll post a recording tonight. Okay, only Rawdaw and one more person that left. Nick. Can't see. Okay, I'm gonna leave the stage and rejoin real quick. If that doesn't fix it, then that's a oh well moment. Give me 1 second. All right, can you guys see now? I haven't really showed too much yet. Yay, nay. Okay, yeah. All right, we'll continue. So any questions? And but for those that didn't see it, here's the blind audit mode, right? I click blind audit mode, boom. I cannot see the P&L or results of the trades. So now I can go through and authentically check the keywords. Also, you're supposed to put one screenshot for the trade entry, which is this, and one screenshot for the trade result. The blind audit mode blocks the second screenshot. Even when you go to edit the trade and change the keywords, you cannot see the trade outcome. You can see the second screenshot. I didn't want to go that far, but yeah, so blind audit mode, that's what that is. Okay, sweet. Any questions before we go to the scalability analysis? Because we got to analyze the scalability of this strategy, and you guys will see what I'm doing personally. Now with my, and type in chat while I'm talking. With my afternoon strategy, I found that, you know what? There's a slight edge if I add a funded account after every single red day. Okay, at first it was 2 red days in a row. It wasn't common enough. Then I did it every red day. It's fine. Now, if you have a profitable strategy, the more accounts you add, the more money you'll make. So if you have a profitable strategy where the majority of days are green, you will make a lot more money adding on every green day, right? Over the long run. But you can have a max of 20 accounts on Apex, right? Even less on Top Step and other brokers, other prop firms, right? So part of the scalability analyzer is see how does this fare against the drawdown and how can I add accounts? Looks like no one has any questions. So let's do that. We're going to go to the scalability analyzer here. It's called the Launch Funded Future Strategy Scalability Analyzer. That's a mouthful. Here we are. And what I will do is I already have this saved, right? We're not going to do that. Don't worry about my AI down here, by the way. I'm not going to be using it. Let's add a funded account. We're going to start on the first day, which is May 1st. Create account. Here we are. We have created a funded futures account. There is no drawdown. There's no payouts. This is just it going up and up and up, right? If I insert a drawdown, I can do a static drawdown, a realized trailing drawdown, because unrealized trailing drawdown's impossible because you guys aren't journaling the unrealized moves of a trade, and you can't even do that on this platform. Apex is a realized trailing to static drawdown. Here's the Apex drawdown. It's a $2,500 drawdown, and it halts when you reach plus $2,600. So if you have a $50,000 account that reaches $52,600, your drawdown stays at $50,100. Right? Now I have a drawdown, and you can see the distance to that drawdown. You can see right here, it got fairly close. Now there is a little glitch that I'm working out with some of these accounts. It'll flip negative, but I wouldn't worry about that. But you can see if I start, let's just say I start an account on May 16th. Let's see. If I start an account on May 16th, let's add a drawdown. And yeah, there's a mild glitch with the drawdown as far as the tooltip. Sometimes it'll show a negative value if the account hasn't blown up. Don't worry about it. But this is an account that blew up. So don't worry about this negative 475 at the trailing to static drawdown distance. It's just some weird glitch with some of the accounts. But you can see this is your distance to drawdown. The account blows up here. So even though the strategy is profitable, if you start your PA during the wrong date, it's going to blow up. You can also insert payouts, right? $2,000 payout account. With approval delay, I will do approval delay of 1 day. Continue. Let's select on the chart where I want to take my payout. Well, let's go to day 8. Sorry, it's kind of hard to see. This is day 8 right here. P&L is 3,600. It's going to take at the end of the day. So it's going to subtract from the account on the 9th, right? Because your payouts aren't just immediate. Oh, there you go. Now you've taken a payout here, $2,000 payout, and you can see the account drops $2,000. And now it gets real close to drawdown, right? Within 1,000 of drawdown. Let's say you take another one. You're eligible to take a payout on the 16th. Your account's not high enough. The account finally comes back up. Your account is up. Well, let's do this. Your account has reached $7,200. We're going to take another payout. Just 1 day delay like normal. And then we'll do it. Actually, I'm probably not going to wait that long. Let's do, here we go. End of day 21. Account reached, or during day 21. At the end of the day, it closed at plus 3,000. But at the top of the day, it was at 4,500. Let's say you take a payout here. Gets real close to drawdown once again. Very close to drawdown. And if you take one more, you can see how close it gets to drawdown so often, and your account can easily blow up. Now, I don't use this manual payout feature very often. You can, let's just do one more payout real quick of 2,000. Because I don't even know if this feature is working 100% properly like it used to, because again, I had to fix a lot of the things with the CSV. See, if I take a payout there, the account blows up. So you can play around with how easy it is for your account to blow up even after just 1 or 2 payouts. Your pullbacks are going to get real close. You're going to go from plus $5,000 in the account all the way down to plus $300 to draw down. Most people are not going to be able to retain their perfect psychology if your account is up 4,000 and then comes within $1,000 to the drawdown. 99% of people are not going to be able to do that. I've even been a big part of that percentage most of my futures trading career, right? It's hard to accept. Type in chat, do you see how this tool can be useful as far as actually visualizing that and planning out your payouts and knowing what to expect, right? If you plan out your payouts accordingly, you're going to see that your account's going to drop kind of close to drawdown, but by visualizing it and actually seeing it, it's no longer going to be unexpected when you do it live because it happened in your scalability analysis, right? And now it's kind of hard to see because my screen's big and I'm zoomed out, but you have the days here. You have day 1, day 2, day 3, day 4. These are your trading days. And if it's green, it was a green day. Red, it was a red day. Well, I don't do any of this manual stuff. I need to automate this because what I used to do is on pen and paper every red day. So on May 7th was a red day. I add a new account by May 8th. That's hard to do. Well, let's do this. We're going to delete these accounts. We're going to go to account practices. Let's automate this. Let's figure out which is the best option because I don't have years of time to go through the hell of simulating scaling to 20 accounts just to figure out, you know what, I shouldn't be adding every green day. It should be every red day or every 2 red days, so on and so forth, right? Huge pain. So for the first account, we'll do a start date of May 1st, beginning of my data. How do I want to add my accounts? Well, let's test adding 1 account every single red day. Or I can do every 2 red days. And I can make this consecutive. So I only add an account if I get 2 red days in a row. Or 2 green days in a row, so on and so forth. But I'll make it every 1 red day. Starting on May 1st, add account every single red day. Payout practices. We'll come back to that in a second. Drawdown practices. $2,500 drawdown. We're going to do the Apex one, which is a $2,500 drawdown, and it goes static once you reach 2,600. And let's just see what this brings up. Apply practices. We have created 41 accounts. 15 of them blew up without any payouts. Look at the equity curve, guys. If you add an account every red day, look at this. Look how many blow up. Some do okay. This one got within $90 of the static drawdown though, and this is realized. So if it's unrealized, you should always have about $100 to $150 of wiggle room. This definitely blew up in real life because it would have been unrealized, right? Look how many accounts blew up. Now a lot of them did well, but you're gonna see that they don't really escape this drawdown till roughly $4,500 to $5,000, right? Even though this is profitable. Type in chat, what are your guys' thoughts? Seeing this and actually visualizing, okay, this is a profitable strategy, right? But only 63% of my accounts make it, which is okay. You know, if this were a strategy I'm trading, I'm like, okay, 26 out of my 41 accounts, they ended up making it and I end up getting payouts from them. That works, right? I can accept that. But if you don't do this and actually see, okay, I'm going to blow up about 40%, I'm going to blow up 36% of my accounts. It's okay though, because over 60% of my accounts will make it and will make money forever and ever, as long as I have perfect psychology. If I see that and understand it and internalize it, it's okay. I'm not going to be attached to my PA accounts because this is now the higher agenda. I don't care about each individual trade. I don't care about each individual day or week P&L wise. I don't even care about each individual PA account because that is my higher agenda, right? And all of a sudden, I'm able to have perfect psychology all the way to 0 on my PA accounts and not care. If you don't do scalability like this and you have no idea what to expect as far as your PA accounts, every single PA account lost is going to hurt like hell. And then you trying to avoid losing your PA accounts, the only way it's possible to avoid them is by bending your strategy. It's guaranteed you're going to lose all of them, instead of guaranteed you're just going to lose a small percentage of them. Let's add some payout values now. Now, account practices. I'm going to do an Apex. Let's just do this. $2,000 payout every 8 days if, so every 8 days if the account is above $4,100. That's what your account needs to be at on Apex if you want the full $2,000 payout. $4,100. Let's apply it. Take a look. I've blown up half of my accounts over the course of 6 months of backtesting, right? May, June, July, August, September. Sorry, 5 months. 5 months of backtesting. I would have blown 20 accounts, but I would have had 21 green ones. And as long as I have perfect psychology, I make $170,000. That's not bad, right? For 5 months? I wouldn't say so. That's 30K and some change. Right? It's not bad money. But imagine not seeing this number and then trying to just make money from your PA accounts. You're not going to be able to lose half with perfect psychology. You're going to have imperfect psychology and you're going to lose the other half as well. And this number is going to be a grand 0, right? This is the higher agenda. And you can see some of them blow up right away. A lot of them, I mean, you went on a stretch here. You went on a stretch of blowing 1, 2, 3, 4, 5, 6 PA accounts without getting one payout. But then you had your streak of accounts that were entered at the right time. Look at this one. Boom. Got real close to drawdown here, though. Probably would have blown up, but whatever. Boom. You're going to get lucky sometimes, but it wasn't until I did scalability analysis, I'm like, wow, that I always knew how prop firms make money, but actually seeing it and seeing how, like, just one payout blows the account and prevents all the potential, right? Finally, you're able to visualize how the prop firms actually make money and how much money they do, because how hard it is for an account, even with a good strategy, right? 49% win percentage, 1.3 risk to reward ish. Good strategy. It works. It's profitable. You're blowing a ton of accounts. Good luck having perfect psychology if this is happening. And no one's able to do it unless they do scalability analysis. And pretty much no one does, right? That's why most traders never get payouts, because they can't do this. Type in chat. What are your guys' thoughts on this visualization here? But look at this streak of accounts. Look at this one. Look at this one. What are your guys' thoughts? Look at these in a row. See, we had a terrible streak here. Red, 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 red. And then look at this streak. Ready? Every storm comes to an end. Every unlucky event and circumstances gets balanced out by a lucky circumstance. Look at this. You blew 6 PAs in a row without one payout. You got the first payout, and then it blew up. Terrible streak. But then all of a sudden you go through 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 funded accounts in a row with at least 5 payouts each. No, 6 payouts each. $60,000 without one missing account. This is what I'm talking about psychologically. No one is able to experience the lucky streaks because they're too bad losing their good psychology on the unlucky streaks. And when you lose your psychology on the unlucky streaks, you can never experience the lucky streaks of price action and circumstances because you blow all your accounts while you're unlucky. Type in chat, does that make sense? So if you ever want to visualize the potential of having perfect psychology, use this tool. Look at the streaks. But I don't like blowing 50% of my accounts. Let's change some things around, okay? Look at this. Let's make the payout threshold. Let's do 4,600. Let's do 5,000. Let's see if that helps. 5,000. Does that help? Oh, just refresh my page for some reason. We need to redo it. All right, give me 1 second. I don't know why I refreshed my page. I probably spent too long on that page. And by the way, you can do this, do these account practices, and then save it. So at any point, you can bring it back. Account addition, every red day, 1 account, every 1 red day. We'll leave it at that. You can test around the other stuff. Payout amount, 2,000. We'll change it to every 8 days, but we'll also make it when P&L is above 5,000. Drawdown practices, let's go to Apex. 2,500 and then 2,600, okay? There we go. Apply practices. That's a little better. When I wait longer to take the payout, what happens? 24 accounts, green, 17 blew up, an extra $18,000 in payouts. That is not bad. Now, some of these accounts are going to get paid out less, but that's not bad. Let's do something drastic. I'm going to bring the P&L to 4,600 because this is typically where I would want to take it. 1 second. See what it looks like? There you go. 23 accounts, 18 blew up. It's a little better. Let's change the sizing, though. Now, my standard sizing, I dropped it, especially after doing this. Let's change the sizing because all the trades are documented as 2ES, 1NQ, but let's override the sizing of all the trades and make every single ES trade of mine 1 mini and every single NQ trade 5 micros. Let's see what that does. Oh, that looks like it broke it. It did break it. That should be way better for some reason. Oh, yeah, there you go. Sometimes, if it's weird, hit this refresh. We dropped the size a ton. 38 green accounts, only 3 blew up. $236,000. It's crazy, right? Type in chat, how crazy is that? No one thinks it's crazy? Everyone's like, yeah, it's expected. Well, I'm about to blow your minds right now. With the full size, there was no delayed gratification. A lot of the accounts, you were getting your payout within the first 8 days. When you guys start a new Apex account, for how many of you guys is it hard to even go 8 days, 2 weeks, perfect psychology? It was really hard for me in the beginning. It's been hard for me for streaks of time if I want to pay out, right? For a lot of people, going 2 weeks with perfect psychology is hard. And by the end of 3 weeks, you're really wanting a payout, right? 10 trading days, you really want to pay out. Well, the other one, with the full size, you blow way more accounts, 50% of accounts, you make $180,000, and you're getting no delay gratification. You're getting payouts on oftentimes on the first couple of days you can. Mostly between day 8 and day 10 is when you can expect a payout. But you're losing half of your accounts. Good luck having good psychology. Well, dropping your size to half size is not just a solution, right? There's always pros and cons of everything. Right now, it looks like all pros to this half size stuff, right? Here's the con. First payout on this account. Day 14. Sorry, day 13. First payout on this account. Day 45. No payouts on these accounts here. First payout on this account. Day 40. First payout. Day, what is that? Day 51. Or sorry, this isn't day 40. This is day 60. Day 60 here. Day 60, day 51, day 50, day 48, day 45, day 41, day 44, day 36, day 37, day 34, day 32, day 24, 27, a little bit luckier streak, 21, day 27. Big difference, right, guys? A lot of you guys, it's hard to even go 2 weeks perfect psychology. Try going 60 trading days, which is 3 months without a single payout. Honoring your rules of, you know what, I'm not taking in a payout until the P&L is above $4,600. Good luck. If you don't do this and you don't expect, because you see this number, you're like, okay, this is awesome, this is beautiful, but then you don't look a little closer, you're like, oh shit, the average day of my first payout's gonna be day freaking 40? Well, I'm gonna have to do it because I can't afford to lose half of my accounts, right? And make even less money. But in order to get my first gratification, I have to go 2 months perfect psychology. Of course, you're gonna make some mistakes, that's fine. But roughly about 40 trading days on average for my first payout in order to get to this number in 5 months. If I want to average 40K a month, I need to get to, 40 days perfect psychology, refusing a payout, even though you can. A lot of these accounts didn't get a payout even though when you really wanted. This account was up $4,300, $4,350, and then went nowhere. This account was up $4,300, then went down to plus $812, less than $1,000 drawdown. Good luck having perfect psychology during that. And then it went sideways until July 1st. So a month it went sideways, and then it finally got over 4,600 to where you could take your payout. If you caved and took your payout right here, your account would have blown up shortly after, and it wouldn't have been a $6,000 account. It would have been a $2,000 account and then blow up. And then that bad psychology leaks into your other accounts. So when you apply these account practices and you see, okay, these account practices produce good profits, you really got to dive deep in what will it require you to accept? How big are some of these pullbacks? How long am I going to have to go without paying myself out? You're really going to have to set your expectations in order. It's going to be pretty difficult. And this, again, it's usually with account number 5. For whatever reason, account number 5 has this negative value. But this came within $52 drawdown, right? Type in chat. How much of a game changer is it when you start actually thinking this way? And you realized, and you start to realize, well, shit. How am I ever going to be able to do this when I don't even have a documented strategy? You don't even have a documented strategy. How are you ever going to be able to do scalability analysis and be able to trade for those long periods of time and whatnot? It's damn near impossible. The odds are very against you, right? If you have great enough psychology and decent enough subjective trading, you can get a bunch of payouts, but you're always going to be blowing those accounts. It's going to be very hard to get consistent income, right? This makes it possible, but it demands a lot. Well, it says 38 green accounts and 3 blew up. We're going to ignore the 20 account limit on Apex. We're just going to ignore that. I think more blew up. Let's check. How many times did this get extremely dangerously close to drawdown? Here's one account. This is 4 blowups. This came within $52.50 of drawdown. It's a glitch with account 5. I don't know why it chose negative. This will be 4 accounts blown up. Because remember, this is realized drawdown. We have to be honest with ourselves. Unrealized is going to follow closer. Blows up. We have 4 accounts blown up. This one, $52 till drawdown. Yeah, that's going to be blown up on unrealized. That's 5 accounts blown up. This, 220. I'm going to count this as blown up to be pessimistic because you're going to come within $50 of it, and you're probably not going to have the best psych. $50 away from drawdown when your account was just up $3,000 almost. So that's 5 accounts blown up, or 6. No, 6 accounts blown up. 4, 5, 6. Okay. This one's okay. This one's a decent distance. This is 7 accounts blown up. Another one that's $52.50 away from drawdown. This is 8 accounts blown up, $52 away. 9 blown up. 10 blown up. 11 blown up. 12 blown up. This one's okay. This one's okay. This one's fine. This one's fine. Fine. That was a rough streak there, right? But perfect psychology will give you good streaks like this. So realistically, it doesn't show it because it's realized trailing. This shouldn't be 38 and 3. It should be 26 and 12, right? Which is still better than the last one, but not that much. Well, let's apply my actual strategy, okay? We're going to go here, and we are going to apply my strategy. And yes, all of your bias builders and all of these scenario filters work with the lines. Let's apply my strategy. 2, 3, 4, 5. Refresh. 28 accounts. 0 blow up. 204,000. Now, why is there actually some accounts getting less payouts? Well, it's because there's not going to be as much trade. There's half the trades. 0 blow up, though. Let me make sure this is all right. Every 8 days, 4,600. Okay. Standard sizing correct. All this is correct. This is my strategy. With this win rate, it's just a consistent enough equity curve to keep an okay distance from drawdown. This is a lot easier than the last one because the last one showed you 236,000, but also half of the green the accounts that got big payouts blew up, right? So that was fake. That 238,000 was fake because there were actually 9 more blowups. You should subtract another 100. You should subtract another 100 grand. This one is actually 50% better than the other one. Let's go see how many got close to drawdown. So we got kind of close here, still 1,200 away. There's obviously a lot less trades, and there's less red days, okay? There's less red days, so I'm not getting as much, but none of these accounts got very close to drawdown. This is my scalability analysis. And yes, I would make more money if I, let's just do every green day instead. If I add in an account every single green day, let's refresh this. 64 accounts, 0 blowups, 486,000. If I add every single green day, because there's more green days. But first off, I limit it to 20 days. And second off, I don't like adding accounts on green days. It's just the gambler's fallacy in me, right? One thing I like about adding accounts on red days is it gives me something to look forward to. On red days, it kind of sucks to have a red day. But if on a red day, I finally get to add another account, which is adding another income source, I actually kind of look forward to red days, right? A little bit. I look forward to red days because I get to add another account on a profitable strategy. I get to add another income source. As long as I have perfect psychology, it will be an income source. So I look forward to red days. It's really hard to have bad psychology if you look forward to losing money because I get to add more accounts. But yes, technically, you know, if I had unlimited accounts, it would do fine. But, you know, let's do every 2 days. Let's do every day, every 2 days, one account. Let's see how that works. We're going to go here, and then we're going to go refresh. 46 account, 0 blown up. That could be a little better. Every 2 days, maybe. I can mess around with it. But also, one thing you got to keep in mind is how quickly do I want to add 20 accounts, right? I want to scale into it. Because we're humans. There's a risk of, you know, I can have bad psychology. With this strategy, with flawless execution, it doesn't matter where I start an account, it's probably going to make it out. Right now as it stands. With my keyword filters, which I know are authentic because I've audited every single trade. So my data is not biased. My data is 100% truthful, authentic, as good as I can get it, right? If I start an account on any given day, it's going to be green. But if I start with multiple accounts, if I start with one account with proper size, incredible odds I have perfect psychology. If I start with 20 accounts with the same size, very low chance I'll have incredible psychology. Because what happens if I happen to enter right before $2,000 pullback or $1,500 pullback and I have 20 accounts getting close to drawdown? Good luck accepting that. So we have the human variable, which this doesn't show. And that's why I like scaling into my accounts. Every red day, every 2 days, whatever it is, scaling into my accounts because I have time to make errors, right? I can lose my psychology in the beginning of this strategy and blow up some accounts and not have lost everything. It's a hedge. So yes, you see more accounts and more money made because you get in quicker, which is true for robots. But if I have poor psychology, I lose everything quicker, right? So I like the adding at one every red day for that reason. I look forward to red days, so it helps me have better psychology, and I scale slower, so I'm hedged. I'm not risking as much, right? I'm not risking as much. I'm rarely to never at risk of, by the time I'm at 20 accounts, let's see. By the time I'm at 20 accounts, it's taken 4 months. 3 months and some change, right? By then, my psychology will probably be worked out. And I probably would have blown plenty of accounts, but I would have had time to refill the accounts, so on and so forth. But after 2-3 months of flawless psychology, I can change this. I can be like, you know what? I'm going to up it a little bit. My psychology's been perfect for months. I'm taking payouts. I'm doing everything flawless. I'm back testing every day, studying every day, doing everything I need to do. I'm going to do 2 accounts every single red day until I'm at 20. Or I'll just go to Top Step or do 2 accounts on a different prop firm, whatever it is. And there you go. That's a lot more, right? So you can change it up based on your psychology. But if I can scale in with the red days slowly, so I'm hedged, I'm not risking losing everything in the beginning, and I look forward to red days, which is a psychological benefit. There's a damn good. I mean, if every single one of you guys did this with even a half-assed strategy, nothing near as complex into the level mine is, but you at least did an honest strategy that looks okay, and you did scalability analysis, and you found something where you at least passed 60% of your accounts, or 70% of all your accounts before they blow up get one payout, or whatever it is. How the heck are you going to be unprofitable? Because 10 PA accounts only cost like $1,500 plus evaluations. Let's say $3,000 top end. Top end. Most you can pay for 10 PA accounts is $3,000. If you use this scalability analyzer with a half-assed strategy and at least attempt to have good psychology, you're going to get a payout on 2 of them. It's going to be impossible for you to be unprofitable. You're not going to be very profitable, but you're going to stop losing money on trading because you have added an entire new systematic level to your trading, which is continue to become more and more mechanicalized. And on top of it, not only do you learn a lot about TA and all this stuff, but you also improve your psychology a ton. I can learn to wait for 40 days before my first payout. It doesn't bother me. But with this strategy, let's go back. With this strategy, I can get a payout. Well, May was crazy. Payout on day 11, right? On day 17, on day 28, on day 23. See, with this strategy, I'm getting payouts a lot sooner instead of waiting 40 days, like without the filters. This account practices does one more thing. I can choose to do this. I can choose to do this. I can add an account sizing practice, not standard sizing, to where if we get above, let's do $6,000. I change the size to 2 minis on ES. And if I get above $6,000 on NQ, I change the sizing to 1 mini. And what I'm going to do is I'm going to add a payout delay of 1. So if the account gets past $6,000 after it has received at least 1 payout, I will double my size. And I can choose to make this permanent to where even if the account drops below 6,000, I'll keep it that way, keep it that size. Or I can make it dynamic. If it drops below 6,000, I can go back to the original size. I can also add a scale down one to where I scale down if I get within $500 of a drawdown. So you can use this scalability tool to really mess with your position sizing. Like, okay, I blow up 20% of my accounts, but if I scale down half size when I'm within $500 of my drawdown, only 5% of my accounts blow up. You can test things like that. So if I test something like this and I apply the practices, does it hurt me or help me? Doesn't look like it hurts me at all. I don't know if this is 100% working properly, though, because there's supposed to be a... Oh, wait, no, it hasn't gotten above 6,000. Did this never get above 6,000? No? None of, none of them got above 6,000, really? Okay, let's change it. Let's do 5,000. None of them get above 6,000 because they keep... Oh, this one did on this day. Again, I didn't test this I haven't tested the size changes ever since I fixed this. I spent all day and all yesterday fixing the scalability analyzer. Let's change it to 5,000 and see if it works. If it doesn't work, I'll fix it. You'll see a yellow line and you'll see the size change, and then all your trades will show a different size after. Yeah, this feature may be out of commission. But anyways, as of tonight, so after the recording, I'll fix it. You'll see the size change, and you'll see a vertical line where your size change. So you can really test and see, should I increase my sizing if it goes up, increase my sizing, decrease my sizing if it goes down? Should it be permanent, dynamic? You can really play with things and see how much money you make. Because remember, after 3 months on Apex, you don't have to wait the 8 days anymore. Or it might still be 8 days. You can change the amount you pay yourself out, right? So at some point you're going to want to increase your size so you can pay yourself out double. But anyways, with the scalability analyzer, you can really learn what to expect. You can prepare for the future, and you can see what's reality. No one really knows what reality is because they don't use any of this. And like I said, I'll fix the sizing practice so it shows on the chart after this session. But as far as it stands right now, this is my plan. This is what I will personally be doing. And in order to do this, the strategy is pretty complex. It's pretty difficult because I have to analyze every single trade, make sure I'm using the keywords properly. There's still some gray areas I got to work out. It uses a lot of brain power. But this is my grand plan. This is what I'm going to be executing from here on out. And I'm looking forward to it. So type in chat. Do you guys not only understand my game plan, but are you guys inspired and motivated to create your own game plan so you can really start thinking about your trading career systematically and actually try to build an income source out? It's something to expect. I'll let you guys type. Yeah, David, there is. I'll actually send that right now since the recording's not on it. One moment. There you go. All right. Does anyone have any final questions for this part 2 strategy reveal? I thought it was going to be shorter, but again, these strategy reveals aren't made to, because I can't teach you guys a strategy in one session. Like this would be, in order to go through all of my keywords and data, it took me months to gather this data. It'd at least take 20 hours to teach it, right? I have no plans on doing that. It's way too valuable and way too much time. But I'm not just kind of showcasing what I have and what I'm going to do. I'm showing you guys the opportunity that's at hand here and how to exploit these opportunities and use these systems to really start taking your trading a lot more seriously than you are. Because a lot of you guys probably have found out there's really levels to this game, and most people never get to the next level because no one sees trading the way this actually displays it, right? So I hope by these 2 parts of this futures reveal that not only do you understand what I'm doing, but you're inspired to do something for yourself, put a system in place, figure out what to expect, and actually take control of your trading career. Because it may take a lot of time, it may take multiple strategy hopping, right, and psych preparation every single day in order to execute your strategies, but eventually you're going to find a strategy where you like the scalability analysis results and it's authentic data, and when it comes time, you're going to be able to execute it because you've been studying trading psychology along the way. So where did you post part 1? I did not post part 1 yet. I'm going to post both parts. It's going to be actually be in the lesson archives channel just because I don't have a good place for these. But I'll post both of these tonight. Make it much easier adding, calculating. Yep. And I'll fix the sizing changes, the sizing practices tonight, later tonight. So that'll work. And make sure to use that blind audit mode, guys, because that's a fantastic mode to make sure your data is authentic and whatnot. And yeah, it sucks that you may need to put in more work and change, and maybe your strategy doesn't work. But if you authenticate your data, the worst that's going to come from it is you're going to know it needs changes. There needs to be changes to be made, because after you go in blind audit mode and you find out, oof, my strategy is actually not as good as I thought. I'm triggered into a lot of these red trades. I'm triggered into less of these green trades. Good. Now your expectations are back down to reality. If you started forward testing and trading futures accounts or your options account with those other expectations you had before you did a blind audit of your data, you'd blow up your accounts because your expectations are out of line. So yes, you're spending time, but you're improving as a trader, especially maturity wise, and you're saving so much money. You guys, trading doesn't need to be nearly as expensive as a lot of you guys make it. And if you're spending a lot of this time, if you're doing all this stuff that I've been doing, frankly, you're not going to have time to spend a lot of money because all your time is going to be back testing, doing scalability analysis. Then when it's finally time to trade, you're adding accounts so slowly that it's like, it's pretty hard to spend more than a couple $100 a month. So, all right, that is it for this session. I will post both of these recordings tonight. I'll actually probably post them on my YouTube. Yeah, I'll probably post them on my YouTube. I don't care if these sessions other people can see them because it's not like, if you don't know me and you don't have my TA education, my strategy is not going to, the stuff that I talked about in this lesson isn't really going to do anything for you because you don't even know what LMOMO is. You don't know how to identify a liquidity sweep or any of these things. But I want to make it free because currently this strategy builder is free and I want people to take advantage of it. So this will probably go to my YouTube and the upload will be a lot faster as well. So, all right, sweet. You guys have a blessed rest of your night. Let me know if you guys need anything. I'm very excited to start executing this strategy with you guys tomorrow. And yeah, we'll see how it goes. Everything from here on out is just documentation and psychology. That is it. So we'll formally start the lock-in again tomorrow. I didn't really post a schedule this week though because Veterans Day kind of threw a wrench in it, right? Usually it's on Monday. But next week will be the next full week of the lock-in. So I got my strategy together. Of course, there's always more to do, more data to collect, all those things. But now it's just psych and execution. That's it for me. And I hope you guys get to that point as well. All right. You guys have a great night. I'll let you guys know when this is posted.